Would you invest in a company that makes the list in Bill Gates' stock portfolio and has enough cash to pay off its liabilities about 3 times over? Let's help you fine-tune that answer. Is Schrödinger a good stock to buy despite Bill Gates' stake in it? Let's get right into it. Schrödinger is a $5.5 billion company that provides a physics-based software program that enables the discovery of novel molecules for drug development and application. They are basically into software development and drug discovery, although most of their revenue comes majorly from their software endeavors. Some key points they present in attracting investors to their company include using novel methods to create these molecules against the more traditional methods. If you stick around long enough, we will delve deeper into their modern approach to staying ahead of the competition and why it matters to you. In the meantime, you should know that their methods are low cost and have a higher probability of success. Then finally, there is also what in business terms would be called their USP, unique selling position. You might want to pay attention here.
I am ready. I am so ready.
More often than not, what Schrödinger does is something other biotech companies have been attempting for years. The development of molecules can be lengthy and complicated, especially if you attempt to make one that combines multiple properties, which is almost impossible. Various molecules portray various properties, and that's where the time and loads of investment come in, which, unfortunately, is the same thing that both drives investors away and kills these biotech companies committed to such tasks. So like a sailor perceiving land from a mile away, Schrödinger has seen a window of opportunity in this and taken it up to another level. Their company promises and delivers on a massively cut time of high-quality molecule development, which is effective and cheaper. They achieve this using 2 methods, which include, first, machine learning. They employ the use of AI to help them design these drugs. The second method uses sophisticated physics models and formulas to break down complex molecular interactions. So in exactly what way does Schrödinger present as a formidable force in which you should consider investing? We mentioned earlier how it beats the traditional molecular synthesization and drug development methods. Well, did you know that it takes about 4 to 6 years for a traditional drug design to attempt to synthesize molecular structures?
Oh, wow!
And these do not even come close to relevant development most of the time. Schrödinger, on the other hand, synthesizes much more optimized molecules in about 2 to 3 years thanks to their high computational capacities, enabling them to process billions of molecules quickly. That is a real business opportunity. And this is demonstrated in the kind of traction they have gained and maintained over the years, apart from catching Bill Gates' eyes, of course. We will get to those shortly. But in the meantime, you might want to subscribe to our channel to stay updated on how Bill Gates' recommendations and actions can impact your finance and the world at large. Hit the subscribe button now. This Life and Materials Sciences Corporation with headquarters in New York is participated in by the Bill and Melinda Gates Trust to the tune of some 7 million shares. Even though the company is not profitable, it has been steadily increasing the amount of revenue it brings in.
Tell me more.
The company's sales for the most recent quarter skyrocketed 51% to $48.7 million. However, the company's drug development business led in growth percentage, with a 169% gain, while the software division's revenues accounted for the biggest value, with some 10 to 19% year-on-year increase. The drug discovery side of the business, I think one day could be larger than the software side, said popular YouTube stock reviewer Daniel Pronk. Schrödinger anticipates that its sales would range anywhere from $161 million to $181 million in 2022, representing an increase of 17% to 31% above its 2021's numbers. The business model and operations of Schrödinger prove that they are not just good on paper by the kind of companies and clients they have been able to garner and maintain. For instance, against the 10 customers they started with in 2019, they grew to 16 customers in 2020 with a contract value greater than $1 million. Apart from that, they also gained 153 customers with over $500,000 in annual contract value in 2020 against the 131 they had in 2019. Best of all, by the end of 2020, their customer retention was at 99%. This clearly shows a lot of growth, interest, and satisfaction from the customers who patronize their services, especially the software. So yeah, many investors are paying attention to Schrödinger, but is it all because of their present boost? Not at all. Their strategy for growth and advancement also presents as a very appealing one. They seek to apply new technologies, add novel scientific synergies, and pay attention to their business side by maximizing their commercial opportunities. What's more, they seek to also become self-sufficient in their programs and as a company. Albeit, they will not be doing it alone. They currently partner with private companies such as Ajax Therapeutics Incorporated, Faction Therapeutics, Ravenna Pharmaceuticals, etc. If you choose to invest with them, this means that you will also have a share in all these other companies that Schrödinger co-founds and partners with. Saving the best for last, Schrödinger will also collaborate with Bristol Myers Squibb to help commercialize their products where they are most needed in the therapeutic and health sphere. According to their contract, they are eligible to receive some $2.7 billion to help in their work. Now, despite all these wonderful perks, a few areas the corporation must find a way to rein in include the expansion of its operating expenses, something that the business anticipates will be a little bit lower than the 42% it saw in 2021 for this coming year. Then there is also the possibility of high volatility in the coming years due to its high projected revenue and earnings. Could this be why Bill Gates seems to have profiled it as a speculative investment? That is definitely something to look out for in your further research on this company. For more on Bill Gates' stock portfolio, you can check out this video we made on Bill Gates' Portfolio 2022, an inside look into Bill Gates' portfolio breakdown. That's all for now. Thanks for watching. See you in the next video.